Welcome to the Swing Trading with Cycles channel. We're going to do our update on precious metals today: gold, silver, GDX. We're going to look at some ratios as well because those give us important clues. And it's March 18th, 2023. It's our weekend update, so we have a full weekly candle to discuss. Let's start with gold. We'll start on the daily chart and definitely take a look at the pinned comment if you to get to get some past videos. Also, really important context about price action and cycles. So speaking of cycles, my God. So this is a really interesting situation, my friends. Now, we talked about this in previous videos. Again, take a look at that pinned comment that this is a big test of this, but this, which is looking, again, with this big rally, it's looking more and more like this was our 8-year cycle low indeed. And we'll look at this on other time frames, but this is the daily chart version. And so we had this furious rally that lasted 65 days, right, from this swing low to this swing high. And then we declined for about 18 days into a low on day 83. And then we had this little feeble rally, which had all the hallmarks of a bear flag. I mean, look at this thing. And like you could, in a textbook, you would see that you could call, I mean, before maybe this candle told you, oh, uh-oh. So it looked like a bear flag, and then it looked like, oh, wait, we're spilling over. That's exactly what you would expect to happen. And then it said, nope. Like, wow, that is quite the statement. Now, that said, this is all happening off of, there's always this, well, why is the price doing this, etc. So, like, I'll leave that prognostication to others. But what we do know is we just made a higher high above this daily cycle high, right? This was clearly a daily cycle high on day 65. And we blew through this thing. I mean, look at that. My God. That's important to take notice of. And we also talked about this in the previous video, the fact that this actually didn't fail. And so this daily cycle low stands. And so let's think about where that puts us in terms of timing. So that makes this day 13. Now, we could absolutely get a bearish daily cycle and start rolling over soon here, and it could be left translated. But you've got to go with what you're seeing in the data. And clearly, we just made a massive higher high. And again, we'll look at the weekly chart, but there's no reason to think that this isn't going to be a right translated cycle that's going to keep running. And again, we'll look at the ratios, we'll look at the minors, etc., to see if that's telling us anything different. But this is certainly something that you want to take notice of. And if we look at the weekly chart, so that puts us on day 13 of the daily cycle. And in terms of the weekly cycle, this low here that was printed the week of, basically the last week of February on the 20, is that the 22nd week? That's 19, 20, wait, it's 18, 19, 20, 21, 22, right? So this right now is serving as your swing low. And you can see once we went above the high of that candle, so that was, what was that? 1856. That was your buy signal. This hammer candle did that. And then this following week, we got this huge follow through. Now, after a huge move like this, wouldn't be shocking to have some consolidation. I mean, this is a giant candle. What's the range of this thing? 1989 to 1867. So over $100 range in this big candle. So we could certainly see a little bit of consolidation, kind of like this. You see how we kind of consolidated for 2 days and then another big move up. That's kind of how these things generally go. Big green candle, a few small red candles, and then a move higher. And just like we went above that daily cycle high, that was a weekly cycle high on week 18, and we closed above it here. So that's a really, this is a really big signal here. And the same, we're on day 13 of a new weekly daily cycle, and this would appear to be week 2. Again, the daily cycle could still become left translated, and the weekly cycle can become left translated because we're only on week 2. So imagine if we started a decline in 2 weeks from now. That would mean that we've only rallied for 4 weeks. So you definitely have to have your head on a swivel from that perspective. But you've got to respect this for now. This is the 2-week chart. I like to look at this because it gives you a little bit of a preview into the monthly. And this 2-week chart closes next week, or I should say this 2-week candle. So this, look at this big 2-week candle. Again, we could see some consolidation. That would mean a wick on this candle, same way that this candle had a bit of a wick, or this candle. I mean, obviously this marked a big high. That was your high back in March, early March. But this is all signs are looking pretty positive. And if we look at the monthly chart, my God, again, a higher high is the most bullish signal you can ever see. And we did that here, right? Now, this monthly candle still has a ways to close, but so far, what this is like, if you want to just kind of spell this out, you had this big move down, then you had this powerful V-shaped move up, and then you had a little bit of a breather. What is that, folks? What is this right here? That's right. It's a higher low so far. Now, we could have some kind of massive reversal and break below this low here, which is at 1805, give or take. But that, I mean, like we'd have to drop $188 for that to happen. And obviously, if that did happen, there would be a lot of money. There would be some good money to be made to the downside. But so far, if you're saying this is not bullish, like I'm not sure what chart you're looking at. Like this is a higher low here, and again, this is your potential 8-year cycle low, just like this was your last 8-year cycle low right here, right? And you can see this was kind of a flat move for many months after the 8-year cycle low. Here we're getting on something a little bit more vertical, which is obviously always good if you're long, that is. And remember what we said. The 8-year cycle low is being held up by this is your 8-year cycle low here in September. And the high there is 1735. So that's the level that we needed to stay above. And again, there's like just to not to belabor the point, but we made a low at 1805 and now we've bounced. So what is that telling you? It's telling you we didn't even really get close to the 1735 level that we needed to stay above. And we bounced very violently. The only thing that's suspicious about this is the whole quote unquote banking crisis. Like this move here was definitely war induced. And obviously that didn't work out so well. So you want to be aware of that. But to me, that's really just a matter of placing your stops. Like if you were long here, well, you wanted to get out once we broke the low of this month. That was 1890. And the low was 16 something. So you're going to have time to get out and preserve your gains if you know what you're looking at, of course. But right now, this is looking super bullish. And how does a quarterly chart? Ooh, look at that quarterly chart. Man, look at that thing. So this is your last 8-year cycle low on a quarterly chart. And again, this is your potential 8-year cycle low here. And again, every passing day of price action is giving us, it's increasing the odds that is your 8-year cycle low. Let's flip over to silver. The one sort of fly in the ointment is that gold is outperforming. Well, let's look at the gold to silver ratio. Maybe that actually has changed before I say that. So remember, gold made this low here with daily cycle low, and then it failed to make a lower low. Silver did not fail to make a lower low. It made that lower low without any problem. It was like, okay, yeah, I can make that lower low for you. So that means that makes this. Was that, so what's the low there? 1992, 19909. So that gives us a low there on day 79, which is also a potential weekly cycle low, similar to gold. We'll look at the weekly chart. So, right, like, because this definitely could be a daily cycle rally, but given that we didn't spend much time above the 10-day moving average, and this like violent move up that's made a higher high above here makes more sense that this is actually your 8-year cycle, or excuse me, your daily cycle low. And if that's your daily cycle low here, this bullish outside candle, that makes this day 1, day 2, day 3, day 4, day 5. And again, it's the same kind of pattern I talked about with gold. And this isn't something limited to gold or precious metals or anything by any means. When you get a big up candle like this, it's not uncommon to get several days of just like chopping around, especially when it's chopping around at the upper end of the range. I mean, you can see how these 3 days held this low here, like marked by this line, and then boom, an explosion up. So it wouldn't be surprising to see some consolidation before another explosion up, but we're super early in the daily cycle at day 5. So that is incredibly promising. And if we look at the weekly chart on this thing, this would mean that this past week was the first week of the new weekly cycle, because you can see this candle. So wait, that's it. Wait, is that right? So yeah, that candle is 1909. Yeah, that makes sense, right? Because that candle was last Friday. So we made that low last Friday, which became, again, like everything about this chart suggests that this is a weekly cycle low. And we talked about this in the previous video. This is week 26. Silver tends to print a weekly cycle low around week 27, 28. And so 26 is close enough. Like that's absolutely in the timing band. There's no reason why this can't be a weekly cycle low and one couldn't play it that way. It's just really a question of, is this going to be a bullish weekly cycle or a bearish weekly cycle, which is to say, is it going to have a long rally or a short rally? And if we look at the monthly chart, so silver is on pace for a bullish outside monthly candle. The outside candle is such an important pattern to understand. It gives you very clear targets. It's a way to also mitigate risk when you see something looking like it's about to form a bearish outside candle, for instance, the way natural gas is doing. But you can see we poked below the low and now we're on pace to make a higher high. That would be a move above 24.628. So that is actually about $2 from here. So actually a decent amount of upside. And similar to gold, just it's important to like see in your mind's eye the structure of the chart. We had this cascade lower, then we had this move up, then we had this move down, which is looking like it's a higher low right now. That would be followed by a move up. Of course, there would be a move down again at some point. Another move up is the idea. Like this would be the bullish case, which for now is playing out, right? Like this thing stopped here and now it's reversing as opposed to taking out this low. So bullish action here. What does the quarterly look like? Let's flip to that really quickly. So the quarterly is actually still red, and the quarterly went opened at 23.951. So that tells you it needs to get above that level for the quarterly to go green. And if we make a bullish outside monthly candle, we will go above that level. So it starts to kind of triangulate a little bit. Like, right, making that bullish outside candle on the monthly also turns the quarterly green. And that makes it so that it increases the odds that the next quarterly candle makes a higher high. So that would be the candle that opens with April, obviously. So pretty good looking stuff here. Let's see. Are there any flies in like, what is GDX looking like? Is that confirming? Is that starting to wake up? Okay, GDX is starting to wake up. So on the daily chart, so again, you'll see all these charts look very similar with GDX. Gold again. So remember, gold did not make a lower low below this one. Silver made a decidedly lower low, and you can see GDX made only like a slight lower low. So that is 26.59, and that's 26.64. So this is a low by like 5 cents. And so you call this our daily cycle low. That puts us at a similar count to silver. So that's 1, 2, 3, 4, 5. So that would make Friday day 6 potentially. And like the specifics are a little bit less important than like the bigger picture. Are we pretty early in the daily cycle? And it seems like we probably are. Again, similar to the count with silver essentially. And what does the weekly look like? So same kind of deal with silver. Last week would have been the first week of a weekly cycle advance. This is kind of an early weekly cycle low for GDX though on week 23. So that's certainly something that you want to watch. But in terms of where it held, I mean, look at this cluster of lows here, right? It held right around there. It poked below it and then bounced up. So it held where you might say it really needed to. And then let's look at the monthly chart. So the monthly chart is green. That's good. And it is making actually, this is the quarterly chart. Let's go back to the monthly. So the monthly is green. So it's similar to silver. Again, it made a slight lower low. And now it's on pace to make a higher high. In other words, a bullish outside candle on the monthly chart. Very bullish pattern. And that would be a move above $33. And we're here at $30.58. So a nice bit of upside here. And that quarterly chart is actually already making a higher high. Yeah. It's making right now at this point, it's just an upper wick within the quarterly chart. So you are creating the situation where you might open as an inside candle next quarter, but it would still be at the higher end of the range. So all of that looks really promising. Again, potential 8-year cycle low is in. And let's look at some ratios to close this out because that helps us to give us some clues. And so let's look at gold to silver. this ratio, okay, this is good. So we talked about so this thing had a really long rally of 57 weeks or excuse me, 57 days. This is your daily chart. And then we made a swing high after March 10th. I mean, this is a big red candle that breaks below the low of this candle, which marks the high. And since then, we've had consolidation for 4 days. We had a red day on Friday, but it was just inside, so inside the range of this candle. But this has all the hallmarks of a bear flag. Like if you look up in a textbook, that's what it would look like. Doesn't mean it will break down, but it has all the hallmarks of something that would. It's what you would expect to see. And so that's your daily chart. Again, so a very long daily cycle rally at 57 days. So we do need to be cautious of when this thing is going to print a weekly cycle low, because that could mean a pretty strong rebound. But on the weekly chart, this is actually, I believe this is, what week is this? Let's see. So we have a high on week 11. So the same way that we have a daily cycle high on day 57, we have a high on week 11. And so the question is this our weekly cycle high and we're going to start a downtrend on the weekly? Or is this just going to form a higher low, which would mean that we're going to get a daily cycle low early and then or soon, I should say, and start to rally. So this is going to be a really important thing to watch. Over the next few weeks, I think this is going to provide a lot of clues. And if we look at the monthly chart, this is your potential top for a long-term cycle in gold versus silver ratio. And you can see this is definitely a bearish looking candle. What you would want to see if you're bullish precious metals is a candle like that for April, and that would make this a swing high, a bearish swing high, which would increase the odds that we're going to do something like that. Right? So that's your gold to silver ratio. Let's look at the GDX to GLD ratio. So this is the opposite, where we want to see strength from the miners relative to gold. And you can see this thing just made a daily cycle low, just like silver and GDX. So this is day 1, 2, 3, 4, 5. So 5 days of rally so far, which is really it hasn't really gone anywhere. And it looks like we're kind of stuck around here. So the next level up would be like right around there, something like that. And of course, this is a ratio chart. So this doesn't tell you about the absolute prices, but if the miners are outperforming gold, that is almost always bullish for precious metals. And if we think about the weekly cycle, we have a potential weekly cycle low here on week 23 as well. So just exactly the same sort of picture as GDX itself. So we're going to want to see how that plays out. And the last thing we'll look at really quickly is platinum, since that tends to be correlated to some degree. And this thing is still grinding higher in a daily cycle, what it seems like. So what day is that? So we have a high on day 10, and it is currently day 14. So this definitely isn't the most bullish looking chart by any means, like especially this big doji candle on Friday on the daily. So that's important to be aware of. This is day 11 is the high so far, and we're currently on day 14. So you're thinking very tactically, got to get outside of this range to have a chance to kind of test this. And if we look at the weekly chart, so this is a very similar count to silver, looking like potentially a weekly cycle low here on week 26. But again, so far, all we've really gotten is consolidation for the following 2 weeks. So this is a little bit unclear, a little bit murky. The bear case would be that this is actually week 28. And if that were the case, we would still be really close to a weekly cycle low, since we tend to get our lows around like week 30 in that neighborhood. So this is either an early one on week 26, or we're about to have a pretty typical one for week 30. Either way, this big downside, we probably don't have a huge flush lower like we did here, although obviously that could change. So that's the update on precious metals. That's the lay of the land. Thanks for watching.